I'm starting 2025 with a huge update to the dividend growth portfolio held inside of M1 Finance. One of the primary goals going into 2025 was to reduce the amount of holdings inside of the portfolio itself, starting at 40, which is what we ended 2024 with, and moving this closer to something like 30. And the primary driver behind this is just simply management. Managing 40 individual holdings, more or less, was just too much overhead for the portfolio and for my investing strategy. This is very much a passive kind of set it and forget it portfolio where I just check in on it time to time and just otherwise let it do its thing. The whole point of this portfolio is long-term growth. So we're talking 10, 20, 30 years down the road. So stick around and we'll go into each and every position that we've either sold or bought more of going into 2025. Hey everyone, Doug here. Before we jump into the individual holdings that have changed inside of the portfolio, I wanted to give you a high-level overview of where we currently sit as of December 31st, 2024. If you're an eagle-eyed viewer, you may notice that the actual sectors look a little bit different now. For example, both telecom and utilities are missing from the portfolio, so we've sold out of all those underlying positions, and we'll get into that a little bit later as to the why behind it. The other change here is the actual weighting of each sector inside of the portfolio itself. For example, technology has been reduced from 25% of the target allocation to 20% inside of the portfolio. With that change, plus the removal of the utilities and the telecom sectors, it actually freed up enough weighting to get everything to at least 10%. And I think this is overall good. Where we currently sit is we have 40% of our portfolio dedicated to both technology and to the income funds. So that's a big chunk of the actual portfolio, and it's really the driver of a lot of the growth and a lot of actually the dividend payments that occur inside of the portfolio as well. The remaining 60% is split out across the different sectors that you see on your screen now, and I think this is a much more balanced approach to the portfolio overall. I don't think this is its final form or anything like that, but I think we're getting closer to a better allocation of assets inside of the market. So without further ado, let's go ahead and jump into the most recent activity in the portfolio, and we'll go over all the sells and all of the buys that have occurred over the last day. And this is the big change where we sold out of all these positions and that capital got reallocated to other positions inside of the portfolio itself. So let's jump over there and we'll go through these positions one at a time. So if we take a look at the actual changes inside of the portfolio, you can see that this is dated on December 31st, the day of this recording actually, and we've sold out of 6 positions for a grand total of $10,533 and some odd cents, right? And those positions include AT&T, JEPI, AMCR, Verizon, Consolidated Edison, and American States Water Company. And the primary reason that we've sold out of these companies in particular, at least in this round of cuts, it really all has the same underlying principle behind it. And that principle is that this is a dividend growth portfolio. So along with getting dividends from the holdings that I hold inside of the portfolio, I also want that growth aspect to be a little bit more pronounced. And a good example of this actually is if we look at Verizon, where we had about, just $1,000 invested inside of Verizon, but over the last 5 years, we can see that it's actually down 35%. Now, obviously, there are some dividend payouts that occurred during this time, but they're nowhere near going to make up the difference of 35%, right? When you take this and you compare it to something like JP Morgan, which I have here, also looking at the 5-year, review, it's up 72.7%. The way that I think about this is that if I'm going to invest $1,000, I want to invest that $1,000 into something that's going to grow that capital over the long term. And long term, we're looking 20, 30 years down the road. That's the primary driver for selling out of all of those 6 positions and moving them into what I think are going to be better growth opportunities or better growth plays over the course of many, many years. And it's the same thought behind Consolidated Edison and American States Water Company, where these companies traded relatively flat. They never really went up. They never really went down, but they did pay dividends. And it's this exact same kind of philosophy. As I had $4,100 invested between the 2 holdings. And again, I'd rather have that money invested in companies that are going to grow that capital over a long period of time. And down the road, I can make more changes and shift more toward passive income, but I really want to pronounce that growth aspect of the dividend growth portfolio. So we sold out of these 6 positions for a grand total of, $10,500. So where did that money go? Well, we can simply look to the left-hand side of this page on the 12 buy list. And you can see that we've allocated capital to Pfizer, Johnson & Johnson, Caterpillar, SCHD, of course, quite a bit to SCHD actually, AbbVie, Exxon, 3M, Emerson Electric Company, United Health, Chevron, Dover, and Cardinal Health Incorporated. Those are all the values. I'm not going to read them out necessarily one by one, but one cool thing happened as a consequence of this change, actually. So if we jump over to our holdings now, we can see that we've actually gone over 500 shares of SCHD, which is great. That could have been a milestone, a 2025 goal all on its own. Obviously, we're not going to retroactively add it on there or anything like that, but it's a pretty cool milestone to hit regardless, 500 shares into SCHD. And this is actually going to pay us out quite a bit of money over the next year. So with that being said, those are the moves that I've made so far going into 2025. What updates have you guys made in your portfolios? Let me know in the comments below, and we'll see you in the next one. Bye-bye.